The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the September 26th. How about that, folks? Already September 26th. It is the fabulous Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Thursday. Let's make sure that you and I, that we do all that we can to have one heck of a fantastic Friday. And how can we not? You got the Ryder Cup that is going on right now. So maybe some of you are up early in the morning, like I was, watching the events out there. So it's going to be a great weekend of golf out there, great competitive golf. And, you know, the best way that we can always start off our day, my opinion, is to always remember something important. And that's this. Everything in life, folks, happens for us, not to us. Imagine if you or others in your life actually live their life that way, that everything in life happens for us. Make that your guiding principle out there, because then you can go find the hidden treasure in every event in life, whether it be good or bad. Now, for the next hour, I'm going to be your Sherlock Holmes, so to speak. And we know we've got a lot of Sherlock Holmeses out there, because we're going to be looking for clues as to what the markets are doing out there. And to do that, we're going to use extraordinary tools like the A to B equals CD pattern, Fibonacci expansions and retracements. We'll take a look at the Gartley buy and sell patterns. If we see any, we'll take a look at Japanese candlesticks, because those are the messages. Those are the signs that the bulls and bears make for you and I each and every day. We'll look at every trading tool in our bag. You might have some trading tools as well, so give us a call at 877-927-6648 or internationally 727-445-1044. That way you and I, we can go hunting for bulls and bears. It is Fantastic Friday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow futures. They're trading up about 4 points right now, trading out at 16,904. S&P futures off 3.5. They're trading at 1958. NASDAQ futures are flat. Russell 2000 is flat as well. King Dollar, anything but flat, up 272 ticks, up 27 pennies, trading out at 85.57. Goldilocks back $5 right now, trading out at 12.17. Silver up 4 pennies. She's trading at 17.48. Light sweet crude trading up 22 pennies at 92.75. A quick piece. How about that? A quick peek across the globe out here. We'll see over in Europe, really the market's not doing too shabby out here. You've got the DAX up 27 points, the FTSE down 2 points. Apparently they didn't get the memo that the U.S. markets gave to them yesterday, or maybe they got a different memo out there. Hey, even in Asia last night, you had the Nikkei down 144 points, down about 0.8%. Was that really a big deal for the Nikkei as we take a look at its charts out here? Nah, not really. You know, it traded open down and then went ahead and continued to move up. Not a bullish candle or any type of configuration that we see out here inside the Nikkei, but damage thus far minimal in the marketplace. That was the daily chart they were looking at out there. If we take a look at the Shanghai, that was up a couple of points out there. They did not get the message, the memo that the U.S. markets provided to them yesterday as well, closed inside Its swing point high from September 25th out there. No real damage to the markets out there. That's got to make you say, something to think about. Let's take a look at the DAX out here, up 25 points. Let's go see what the DAX is doing. If we take a look at the DAX here, come off of the swing point low. That's the swing point from August the 8th. We go from that high to the, they'll go from that low, I should say, to the high that was put in here on September 19th. What we're going to see is the DAX is trading just slightly below its dead cat bounce area. It's 0.382 retracement level. Hit that area with the wide-ranging bar. Yesterday, markets don't usually end on wide-ranging bars. Today, basically just a little bit of a chill pill out here, just kind of relaxing. Now, it would not be unusual for price to make its way down to the 92.88 level. Right now, it's straight at 94.80. That's what's going on inside of the DAX. We take a look at the FTSE, see how the FTSE has traded here overnight. Right now, down 2 points. How's it traded? Sounds to me doji style out here. And if we take a look at its retracement, meaning if we go from its low on August the 8th to the high that was put in here, that was on September the 4th, you're going to see that the FTSE has hit, or very close to hitting, that 0.786 retracement level. That's at 66.09. The actual low so far intra-session has been 66.15. So what's all that mean? Well, let's go looking for clues out here. What does Stevie believe? Stevie believes that the market is putting in a bottom. Yeah, that's right. So I'm going to take the other side of that. I didn't say go long. What I said is the market is starting to form a bottom. And I'll give you all of the other clues out there for you to at least consider. Because whether you're bullish or bearish, we have to take a look at both sides of the trade. How often? All the time. Now, let's go take a look at, let's go start off by taking a look at, this is kind of interesting here, because the weak link in the market has been the Russell 2000. A lot of big stink made in the air over the past several days about the the death cross that was out there inside of the Russell 2000. Yet all those folks that were making a big deal about the death cross in Russell 2000 forgot to go back and take a look at what Russell 2000 has been doing since November of 2013. It's been trading in a sideways trading range out there. You get those type of long-term moving averages, and that was on a simple moving average. Folks, if you do anything simple in life, you tell me what kind of results you're going to get. Don't use a simple moving average. Go start using an exponential moving average. You'll see that there was no such death cross that occurred out here. What do we know about the Russell 2000? The IWM is what we're looking at. It's very simple. We know that there is a large consolidation that has been going on inside of its daily time frame. And that takes you back into the time frame of November of 2013. Now, the lows inside the IWM, there's two swing points specifically that you want to focus in on. February 5th, on a daily chart, that's got 60 million shares. On the trading session for May 15th, that's got 75 million shares. There's also kind of a junior swing point, and that was tested yesterday. And that's a swing from August 1st with 67 million shares. The weak link out here yesterday, what did it do? It was pushing down with 49 million shares. It rejected that junior swing point. Does it mean that it stops there? It doesn't mean that it stops there. It did a 1 to 1.272, A to B equals CD. The real test comes right at the bottom of the consolidation. I suspect that is more likely where price is likely to travel to, but it did reject a swing point. We'll see if it can get below that 109.86 level. That's on the daily chart. That is supposedly, and that is, let's face it, that is the weak link that is in the marketplace, but it's just consolidating. If we go take a look at the weekly time frame, the weekly time frame really tells the picture. You can see that consolidation as well. And if we take a look at the week ended February 3rd, 2014, where price had closed, we have now closed. It's closed. Well, we don't know how the week is going to end out here, but we certainly are inside that swing point right now. 315 million shares. What have we done so far this week? 181. So you've got the weakest link that is pushing down with light volume. Has it tested that swing point? No. Can it stop below that and blow it apart? Most pattern is at the bottom of the consolidation. Is down here at about 107. So from the low of 107 to the high of about, 120. So you got a 13-point move. If we do see a breakout of those lows at 107, you can subtract 13 points. That becomes your target area. But what we know, what I know, what I'm taking a look at when it comes to the swing points inside the Russell 2000, doesn't have the energy to push it all the way down. We'll see. We've got time. Let's go take a look at the strength in the marketplace. The strength in the marketplace out here, what is that? Well, that is the Qs. If we go take a look at the daily chart, what do you know about the Qs? Because Stevie has shared this with you before, and I will continue to share it until it stops working out here. And that's the beautiful pattern when it comes to volume. And when it comes to volume inside of the Qs, it's this. The Qs make lows with volume. End of story, period. It has been making this pattern for so long out here that is actually the beauty of the volume inside of the QQQ ETF out here. And what did it do yesterday? The volume that we saw out there, 68 million shares. The last time we saw volume like that, well, we had a bottom that was forming. There was 60 million shares on June 1st. Did the volume take place right on that trading session? No, it took 3 or 4 trading sessions. As I opened up, I said, this market looks to me like what it is doing here, it is forming a bottom. And it may take the next several days in order to be able to do that out here. If you go back and you take a look at the Qs out here and you go back to April 15th, what you will see out here is volume of 84 million shares. It made a bottom on that specific day out here. This is a pattern that is consistent. Does it have to happen on the exact day? Absolutely not. It does not have to. But what the markets are doing as we speak right now is they are forming a bottom. Those are the clues that are out there. That doesn't mean exit your short trades. It means do the one thing that you can control, and that one thing that you can control is what? Is your stops. So make sure that you trade with stops out here. I'm not long this market just yet. What I'm waiting for are some additional clues. But those clues tell me that the market is ready to make a bottom. We've got so many charts out here that we can take a look at that suggest that. Let's go take a look at the leader out here. The leader that indicated that the bears took control of the market. It's the New York Stock Exchange. And when the bears were giving us that signal, it was right here on the trading session, quite frankly, here of, September the 5th out here, when the New York Stock Exchange, the summation index, went ahead and turned down. Now, what the summation index did, what the price oscillator did, it's now, yesterday, got down to minus 244.69. Can it get lower? Yeah, it can get lower, but it is now at or approaching those levels where other bottoms have been formed inside the marketplace. Can it break this little rising price channel that's out here that we're taking a look at? Yeah, it most certainly can. But folks, we must be paying attention to these charts, to these technical patterns that are out there. And I don't really care what's on the news and all of the things that are out there. I see that I've gotten a couple of pings here that Bill Gross is left PIMCO out here. So obviously a whole lot of problems out there. I don't think that is going to could be the event that's going to make these markets crack out here. Right now, I'm going to call it like I see it out here. and at this stage, how Stevie sees it is there are so many signals that indicate that the market is trying to form a bottom. Let's go take a look at your favorite currency pair and mine. Let's go take a look at the Euro Japanese yen out here. Oh, there's the trend gauge. Well, that says that we're going to see a bounce as well or a bottom inside the marketplace. When we get back from this break, though, we'll go take a look at the Euro Japanese yen. We'll go see if there's any kind of divergent pattern that could be forming out there as well. 877-927-6648. Don't mean to rain on your parade, but I just call them like I see them. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and congratulations to all those folks that signed up for the TFNN virtual trading competition that begins Sunday evening. Now, of course, Sunday evening you can start trading the currency market. So we'll spend a little time in the currency market. We're going to start there right now by taking a look at the Euro-Japanese yen. And if you're watching us on Tiger TV, the chart that you see out here, the top portion of the chart is the Euro-Japanese yen, the blue line showing you what the closing price is. And on the bottom of the chart, it's the S&P futures contract. Now, this currency pair still tracks the U.S. stock market better than any other currency pair. And the beauty of this chart, this correlation, is to identify divergences that are out there, because it is the currency pair that eventually wins that battle. And what we can see out here as we take a look at the S&P futures, if we come off of the off of a high that was made out here right around September the 5th, September the 4th, that happens when the Euro-Japanese yen, I should say, was making a bottom. What we can see is this is now making what? This is now making higher lows. We see the divergence out here versus the ES mini, which is making lower lows out here. So this too, with regard to taking a look at the New York Stock Exchange, with regard to taking a look at the IWM, with regard to taking a look at the Qs out here, all this put together says that the market is in the process of forming a bottom. Here's what I can tell you with 80% certainty. Now, there are not too many things that I can tell you with 80% certainty out here, but I can tell you with 80% certainty that you're going to see a market bounce either today or on Monday out there. So if you are just, so I'm giving you that, I'm giving that trade away to you as a trade to take a look. Maybe it doesn't happen today, and if it doesn't, those of you that are trading the Nadex platform out there, I would take a look at that as a potential trade out there, and that in the futures marketplace. So that's one little giveaway out here. If we go take a look at the other currency pairs out here, and this competition goes on for a week out here, there is one side of the boat where everybody seems to be in, and that is short the euro out here. You go find anybody that's trying to be long the euro. Now, I'm not saying that being long the euro at this moment is the right spot, but boy, you want to be looking for clues out here because everybody is in the other side of that boat. I don't know that it's going to take place this week, but it is going to take place relatively soon, and you're going to see a huge snapback rally inside of the euro. And yeah, you're going to see the U.S. dollar index begin to crater out there. Yes, that is Stevie's call on that. Now, if we do take a look at the euro, U.S. dollar, and we come off of the swing point high out here from May the 8th, the high of which is 1.39934. That's your A point. Your B point was down here on June 5th, makes about a 40% retracement on July 1st. What the euro's actually done is made an exact 1 to 2 A to B equals C to the downside. That price projection out here, 1.27. What did we see as a low yesterday? We saw 1.26974. It's pretty tough to get too much closer than that out here. We'll see if those lows actually hold out here. The euro now making lower lows, doing it with less relative weakness out there. As soon as you see a bullish reversal candle out here, pretty good indication that we're going to see a fairly good snapback rally. As I say, don't know that it's going to begin or take place on Sunday or Monday, but if you're looking for clues, if you're looking for places to make a fairly large a trade out there utilizing that Nadex platform. This is one of the places that I would be looking, and that is in the euro U.S. dollar out there, which has a direct impact on the king. If we take a look at the other currency pair, the Great British Pound, we'll take a look at the Japanese yen as well against the U.S. dollar. If we take a look at the Great British Pound right now, Great British Pound is actually giving you the signals that it wants to bounce. It's in the process of trying to form an A to B equals CD to the upside out here. If we take a look at the retracement that we can see, recently, oops, that didn't work. Let me try that one more time. That didn't work. Give me a moment here to grab the right tool and go ahead and anchor it. There we go, anchors away. So it looks to me like we'll see the Great British Pound, U.S. dollar, pull back to about the 1.623 level. And that would form the, in fact, what the Great British Pound will be doing at that stage, it will also be pulling back to the last area where it broke out, which was on the trading session of September 18th out there. So that would likely set up an A to B equals CD to the upside in the Great British Pound. If we take a look at the Japanese yen, U.S. dollar, Japanese yen, that's trading out at 109.13. This has also made a 1 to 2 A to B equals CD to the upside. That's off of the low out here on August the 8th. That's your A point. Your B point out here, that happens to be on August the 25th. Makes about a 30% retracement. The 1 to 2 A to B equals CD to the upside, 109.45. So currency-wise, how does the U.S. dollar index get weaker out here? Well, you've got the Japanese yen that's made a 1 to 2 A to B equals CD. If you've got the art of timing the trade, and you make that type A to B equals CD pattern, you're likely to do something else, change directions out here. Do we have a reversal signal? We almost got one yesterday. We almost got a key reversal session yesterday. We did. We got a bearish engulfing candle out here. But in this case here, the Japanese yen could get stronger. The U.S. dollar index get weaker. You throw that on the fire along with the euro out there, that could make one heck of a nice counter trend rally. That's what takes U.S. dollar index lower and Goldilocks up higher. This is Steve Rhodes at TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization deviation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 69 points, trading out at 17,013. S&P up 4, trading at 1970. NASDAQ Composite up 14, trading at 4481. Russell 2000 up a couple points. She's trading out at 1112 out here. Moving to the upside, we've got Shire PLC up 3%, up $7. Nike, holy shnikes, up 10% this morning, up $7.80. Wynn Resorts up 4.53. Janus Capital up 4 1/4. AGO's Pharmaceuticals up $4. Under Armour up a couple dollars. Legg Mason up $2.74. Micron Technology up $1.82. To the downside, Finish Line looks like it is finished, down 11% this morning. FINL is the ticker symbol out here. We'll go take a look at the stock as soon as my chart populates out here. There we go. Finish Line here. Whoa, man, we'll talk about a big gap to the downside out here. Let's go see what this is trading into. See if there's any kind of volume back here on Finish Line. So this thing right now is taking out, it says swing points out here from the trading session of July 22nd. Only 914,000 shares at that swing point low. So far this morning, done already 400,000 shares out there. Let's go see, is there any big volume bars out here inside of this? Let me pull this back out here, finish line, see if I can find anything out here. Yeah, there is. So here's the actual breakout for finish line. So if it breaks that swing point, it doesn't hold. Where finish line ought to trade back to is right here. This thing broke out with some real nice volume right around the 22.91 level. We can see that held. The volume behind that was 4.4 million shares. In fact, there was kind of an odd trading session out here. I don't know what happened. It was not an earnings date. That was on February 25th. That's how strong that level of support of 22.91 was. The actual low was 22.99 on that trading session. But take a look at that wide-ranging bar. It opened up down there. It gapped down and then continued to move up. So look for 22.91 to be the level of support for finish line. FINL is the ticker symbol. Let's take a look at PIMCO, PGP Group out here on the news that Bill Gross is left the company. So as our man Sherlock Holmes, David White, pointed out a couple of days ago that there was trouble in River City, specifically. I believe he surmises, I don't believe this has been proved yet, right? He surmises that Mohammed El Arian is the one that may have leaked the issues, or not leaked it. He just simply, turned evidence on PIMCO. And right now, this thing here is gapping down with some major volume behind it. So far, 200 for this equity, 279,000 shares. Now, oddly enough, it's got a volume bar down here that it has tested. Likely, that's going to get tested again. That's right around the 1960 type area, 1960 to the low out here. We'll put this on a weekly chart in a moment, down to the June 24th low at about 1881. But let's look at a longer-term picture inside of PIMCO. Let's put it on a weekly time frame, see if there's anything that we can identify out here. Yeah, so you got that untested high, untested low, I should say, on a weekly basis. That would take PIMCO down to November 19th of 2012. That's at the 1747 level. And it looks like that is where that will likely head to. You have this high volume bar out here, also going back to June of 2009. How about that? We're back in the 2009 time frame. That high is 1645. The low is 1168. So you see it close inside 1645. You could easily get down to the 1168 mark. That is on ticker symbol PGP. That is on PIMCO out there. Let's take a look at what else is moving as soon as my CPU is working hard here. Now, let's go take a look at some things here that are moving to the upside. Let's go take a look at Nike. I think Nike was out with some earnings. Were they not out with some earnings last night? Yeah. Revenues of $7.98 billion versus $6.9. So they are beating the top line, beating the bottom line pretty healthy as well. $962 million versus $779. So if we take a look at Nike, boy, this is a weekly chart out here. This thing looks pretty nice. Looks like it's trying to take out a swing point with volume this week. Let's go see. What volume base do we use? Actually, looks like it took it out prior to this week. The week ended December 9th, 2013. 20 million shares out there. Was taken out with 15 million. That was on September the 1st. Tested this week, coming back into its market profile. Already has 20 million shares out there. So you've got a nice A to B, a large A to B equals CD pattern inside of Nike out here. Holy cow. Because your A point on this is down at the 43 level. Your B point out here is at 80. Yeah, that's quite a 40 move out there. It says $120 or so on. Let's take a look at the monthly chart to see what the monthly chart tells us as well out here. See if it's taking on that area with volume out here. So Nike looking pretty darn good. The volume here on the trading session for the month ended December of 2013 is 81 million. What we have done, what it has done, it's done 81 million. So you've got a confirmed A to B equals CD in Nike on the daily, on the weekly, and on the monthly. That is pretty darn strong out there, PDS. Hey, if I'm wrong about the market and that we're not forming a bottom out here, Nike's one you want to take a look at and buy on a pullback out here, because you've got a nice, and your buy on this would Well, you're probably looking at somewhere. Well, I'd have to say you go back to the to that weekly chart. It was probably this past week out here when it tested the resistance area of its market profile. I didn't catch that number. I'm going to go ahead and try to pull it up on my screen out here. Looks like it's right around the $80.09 level out there, but don't know that Nike will actually pull back into that area. You've got LinkedIn on the move here this morning. That's up about $5. Let me see percentage-wise. What do we have? That's a big mover. Let's take a look at Diamond Foods. As I recall, that thing had been went through self-destruction mode, DMND, but have not looked at it for quite some time. This is a weekly chart out here. Let's stay with the weekly chart. We'll go take a look at the daily in a moment. What do we know about the weekly chart? Weekly chart has found some pretty darn good support at its market profile at the 2677 level, and right now it's trading above its market profile high. On a weekly basis is the way that we look on a daily as well. Let's just draw a little bit of a trend line in here. That trend line says that price right now is trading right up into it. If it can break that trend line out here, well, then you'd have to say that Diamond Foods, DMND, may have some legs in it. Otherwise, all that it's done is move down into a descending trend line. That was taking a look at the weekly chart out here. Speaking of trends, let's go take a look at light sweet crude out here. Let's go take a look at the current contract. We've got light sweet crude was trading, where is it, up about 22 pennies out at 92.75. We want to talk about trend lines out here. Here is a daily chart for light sweet crude. It is attempting to break out, being thwarted as we speak at the moment by the descending trend line. That trend line that I'm looking at takes us back to the June 25th high out here, and that's at 104.44. Use that as your touch point. The next touch points that you can use out here, the trading session from July 22nd as well as July 24th out there. And what you will see is that the light sweet crude so far on its bounce, and it has given us a nice bottoming signal out here. And that was on the trading session of September the 11th when it formed that key reversal session. And then a little hammer candle 2 days later on September the 15th out here. So it is in the process of trying to form a bottom. Now, I'm not a big fan of breaking trends, breaking channels by moving sideways. And so if we don't see a wide-ranging bar of some sort inside of light sweet crude over the next couple of days or so, I'll put other patterns as a priority, but moving sideways to break a trend never has blown my skirt up. I don't know about George, but it's never blown my skirt up out there. Speaking of skirts, let's go take a look at Goldilocks out here. I don't really know how that transitioned, but I went with it. And so you got gold trading off $5 this morning. And if, in fact, gold is able to hold yesterday's low out here is at 1206.60. Folks, if you're trading the Nadex platform, I'll give you the next trade out here. Go long gold out here. Of course, with Nadex, it's so easy because your stop, is your trade out there. So you're going to try to buy the bottom of a box out here. And I'm not sure what time gold on the Nadex platform begins trading. But if you don't see Friday's low get taken out today, it doesn't have to close below it. Just if it get one tick below it, then I say, that's not necessarily the trade out here. So be watching the price level of 1206.60. Right now, your trade out at 1216.50. A lot of time left in the trading session. We'll see how that one works out. If we go take a look at high-ho silver out here, silver trying to hammer out a bottom out here. It had a chance to form a hammer candle yesterday. It did not. It finally gave up on that. However, the hammer candle that it did test yesterday was the one that was generated on September 22nd out here. That makes a relatively easy trade on silver as well. If you see it close below 1732, it says silver wants lower price out here. At this stage, all that I know, if you got the bulls that are defending that price level, $17.32. It was tested yesterday. It was tested on lighter volume, I believe. Volume yesterday was 51,000 contracts, testing 66,000. That's how you like to see a hammer candle tested out there. Now you'd like to see some kind of sign of strength inside of silver. But again, you've got silver trying to form a bottom, gold trying to form a bottom, the U.S. stock market's trying to form a bottom, forming a top, the U.S. dollar index, forming a bottom, the euro out there. Oh, how about that? I am totally on the other side of what I believe most folks are taking a look at. It's good to be on the other side of the boat sometimes out there. Of course, you can get sunk, but you only get sunk if you don't use stops out there. So always use stops, and that's and you'll be in pretty good shape. Let's take a look at a couple other things that are moving. Hey, BlackRock. Where this thing came out from underneath the rock out here. That's up $10.45 out here. What's the deal on BlackRock out here? I don't see a deal, but let's go take a look at it. It's trading up at $10. That's up 3%, and it is trading to take out its swing point high from this is the trading session from August 27th out there. That high is 337.65. 553,000 shares were traded that day. So far this morning, 160,000 shares. Not too shabby. If, in fact, it closes above that price point again being 337.65, 337.65 out there. With volume, you'd have an A to B equals CD, a rather large one. The A point on this is down here at about the 299. So you'd have a $37 A to B equals CD to the upside. Let me pull BlackRock back a little bit further and see if there's anything else out here. So what do we know about BlackRock at the moment? It's moving higher with volume. It's running into resistance of that swing point. If it takes that out, you've got a confirmed A to B equals CD to the upside. BLK is the ticker symbol out there. To the downside, let's see, percentage-wise out here, we got Puma Biotech, PBYI is its ticker symbol. Let's go see what it's doing. It's off about 6% this morning, down $16 and change. Looks like we can see here, oh man, this thing, what did they cured something out here. Because this thing had 8 million shares to the upside off of the trading session from July 22nd when it was priced out at about $60 or so, and it made a move all the way up to 241. They can't really tell you how to trade this one. Only pray that you actually were a holder of this equity down in the $60 level. It's trading down right now. What it's trading down into is its market profile low, also a swing point. Really, it's trading into, it should have pretty good support out here. Trading at the high of that July 23rd level at the 241.42 range. That is on Puma Biotech, PBYI is the ticker symbol. Also to the downside with percentage-wise, what do we have here? We've got Accelerex Pharmaceuticals accelerating to the downside. It's got its pedal to the metal out here. ACRX is the ticker symbol out here, gapping down with some pretty good volume behind its move. In fact, getting down below a high volume low that was tested and held, but price never closed the window, never got and closed the gap out here. This had a 1-to-1 A to B equals CD that it hit on that gap down, and now it's going to go to its next level. You talk about taking it to the next level out here. Looks like $4.64 may be its next level. Let's try to put this on a little longer-term time frame chart out here. Let's put this on the weekly time frame and see where this might head down to. Oh, boy, this has trouble written all over it. It's now down below a little weekly hammer candle, and that's from the trading session here the weekend ended October 28, 2013. That low was 604. It says timber. Look out below. Probably headed down to about the $3 level, and that is on ticker symbol ACRX out here. Also to the downside, let's see here, PIMCO High Income Fund, that's off 8% this morning, so got a number of PIMCO funds, obviously, to the downside with Bill Gross leaving. So they're the leader in the clubhouse to the downside. Don't have any more news on that. Wynn Resorts, WYNN. Let's go take a look at that. Boy, Janus Capital really on fire. They must like the new recruit that they got out there. But let's go take a look at Wynn Resorts. This is the weekly chart out here. Weekly chart doesn't show us anything really impressive. This is inside. Let's see. You took out a B point from the week of April 28, 2014. It looks like it's taken that out with lighter volume. 14 million shares was taken out with 10, 8, 13, and 8 for this week out here. So let's go take a look at a daily chart, see if it's trading down in anything or completing any kind of a pattern out here. And this is on Wynn Resorts, ticker symbol WYNN. Looks like the pattern that it could complete would be the A to B equals CD to the downside out here. Your A point on this happens to be the highs out here on March 6, 2014. Your B point down around the trading session of April 28th low. And your C point, we're going to come all the way back up here to May 2nd. 1-to-1 says about 161.66 out there. Looks like that is where Wynn Resorts is likely headed to. Right now, we got the Dow's up 52, S&P is up 2, Composite up 10, Russell 2000 up $1.20. This is Steve Rhodes and TFNN. We'll be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 68, S&P is up 4, and welcome to all of our new folks that are inside the Tiger's Den. What a great deal Tom put together for everybody that went ahead and applied for, has joined the Nadex virtual TFNN virtual trading competition. I know I can get it out. I know what I'm trying to say out there, and so great to see so many new folks in the Tiger's Den out here. I'll do what I can late Sunday evening to pop my head in there and we'll take a look at those currency pairs, because the currency pairs begin trading out there, and so we'll take a look at any action, some shorter-term time frame charts inside the euro, yen, Great British pound, Japanese yen, some of the things along the lines there out there. So welcome to all in the Tiger's Den and great workshop that Tom put on last evening. So good luck to all beginning Sunday night out here. Should be an excellent week next week. And talk about a week that we've had out here, a nice week of volatility, and maybe that we'll continue to see that stay through the next week of trading. That would make it one heck of a trading week out there. If we do take a look at some longer-term time frames, the week is coming to an end out here. Let me go pop up on my chart here. Let's go take a look at the S&P 500 out here and see what we've got going. So as we speak this week, we did have price make a little bit higher high last week inside of the S&P, and so we had price moving higher on less relative strength out there. Never a good sign. You've got the S&P on a weekly basis forming a bear sash candle as we speak right now. It needs some additional follow through to the downside. Again, however, we do take a look at the S&P 500. What real damage has been done to the market out here with the trade at 1970 and the high inside of the S&P being at 1986? Not a whole lot of damage. Not a whole lot of damage just yet. And I don't believe we're going to see a whole lot of damage. Instead, what I believe is that the market is trying to form a bottom out here. It may not be today. I'm not saying it's today, but over the course of the next week here, the market is trying to form a bottom. And I believe that Santa Claus is going to come to town very early this year. I believe that Santa's not going to wait till Thanksgiving. Santa's going to have his own parade out here, and that parade is likely going to take place in the early part of October, so late next week out there. But we'll take things one day at a time, one moment at a time out there. Remember, the weakest indice out here, which is the Russell 2000, was pushing lower with what? With light volume out there. Of course, what we'd love to see, what you and I would love to see, is a push down into that February low on the weekly basis. That's got about 300 million shares down there. Test the bottom of the consolidation, because those are where the best trades are taken, at the bottom of the consolidation or the top of the consolidation box out there. And that is what's going on inside of the Russell 2000. We've got GoPro trading down a couple of bucks this morning. Amazon is off $1.30. Biogen, BIIB, that's off about 37 cents right now. Percentage-wise to the upside out here, big mover is Ageas Pharmaceuticals. BlackRock is up about 3%, up $10. Nike, which has a one heck of a nice confirmed A to B equals C to the upside, both on the weekly, on the daily, and on the monthly. Let's go take a look at LinkedIn out here. That's up by $7.80. That's up about 3% as we speak right now. Come on, chart. Go ahead and populate out here. Go on. Come on. You can do it. Well, while it's doing that, let's go take a look at the Dow out here. Let's take a look at the weekly chart for the Dow. Maybe Stevie's got too many things running out here. Here's the weekly chart for the Dow as we speak right now. How about this for the Dow? Looks like does the Dow just only have an inside bar going for the week? What about that? Let me see here. What was the, can I do this here? Give me a moment. Come on, find it. Across here. The low last week was 16,951. The low this week, 16,947. It did pierce it out here. But even if we take a look at the Dow, not really a whole lot of damage as we've seen thus far. Hey, folks, thanks so much for being here. And thanks to all of the great hosts for filling into me over the last several days. That's Tom. That's Basil. That's David White out there. And have a great weekend, a great Friday. I look forward to seeing you Monday morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.